Hi, everyone. Thanks so much for joining us for another monthly update on what's happening in the Windsor-Essex County real estate market. My name is Arms Bumanlag for Royal LePage Binder Real Estate. Joining me is my friend, Mr. Frank Binder, who is our owner and broker of record, who is providing some insight as he usually does. Good to see you, Frank. How are you?
Good to see you too. Thanks, Arms. Yeah, doing well. Thank you very much. All's good.
Well, it's. I was saying to somebody the other day, it's sort of hard to wrap our heads around. Here we are already into 2022.
Yeah.
January has come and gone, and we're in February. But this is the monthly chat with you and I to kind of talk about the numbers and break down what we're seeing in the Windsor-Essex County real estate market. And I know we wanted to kick things off with some of the units here listed in the month of January, and you were going to kind of take a look at some of these numbers here, Frank, and give us an insight on what we can expect here. And I guess there's some news to talk about in terms of numbers on the upward climb here.
Yeah, absolutely. We're, and I've just broke it off at 500,000. That's easy for people to understand. So we've always been doing the under 500,000 and over the 500,000. But you can see in this particular month of January, we've got a lot of traffic in the upper market or the above average market, whatever you want to call it. Lots of traffic there. 67% of the market was in that over 500,000 price range, and so that's an interesting take on what's going on. But we shouldn't be surprised at that, because as the price keeps edging up, or the average price keeps edging up, that you're going to have more people in that market. That's exactly why it's edging up in the first place, and you're going to see that in the average sale price and the various things that have happened this particular month of January.
Now, Frank, with these numbers too, I mean, we do this monthly update. I mean, this has been the last couple of months at least, right? The last 3 months, this has sort of risen.
It's been strong. It's always been, I go back to about 6 months ago, it was almost pretty much balanced between either one of it, but we're getting much more in the upper end. And when you talk about the upper end of the market, we keep track of those properties that are selling over $1 million as well. And what happens with those properties, even in the month of January, I think we ended up with about 35 of those particular properties compared to 20 of the month before. But we're consistently running with about 35 to 40 of those properties being sold each and every month. And that's so there's still a good traffic in the upper market that's over $1 million. And that just means there's lots of houses being sold in that. That also talks about new houses too, because a lot of new houses are really in that particular price range as well.
Now, it's interesting too. I wanted to get your take on this. The under 500,000 mark here. I mean, that number is still decent, right?
Yeah, no, it's great. I mean, when you talk about something under half $500,000, you're talking to the first-time buyer. That might sound odd, but that isn't odd. Basically, what happens is a lot of people looking to buy in the, if I can buy something in the $400,000 to $500,000 range, that's what I'm trying to go to. And there's a lot of competition for that. We're seeing competition again this month of January. Is no different than any of that. Multiple offers on that. A lot of people, a lot of demand for that. So the bottom line is that we're seeing demand still for the under $500,000 market, because I've got to start somewhere. And even if I start in a condominium or whatever it is, we've had those conversations in the past. But the bottom line is that's exactly what people are going to be looking for sure to get started. And it's getting harder. I got to tell you, honestly, it is going to get harder and harder for unfortunately for those good folks who are starting to try to find a home, their first home in the city of Windsor and surrounding areas.
Yeah, we've talked over the last year, Frank, about how attractive this area has become, and really is continuing to become too, with that influx of folks, working from home, working remotely, and just finally seeing this area for what it is in terms of the amenities in the region.
Yeah, I mean, that's the case. I feel the call this morning from somebody who's looking to have an investor come down to Windsor. We see a lot of that, right? We get a lot of traffic coming from Toronto, particularly. And they see Windsor as a great solid economic city, and they can find investment properties where they can get reasonable rates of returns and so on and so forth. So we've been seeing that for quite some time now, and I think that will just continue. I hedge on that just a bit, only from the sake that interest rates affects them a great deal more. So we do see hikes in the rate of interest. We're seeing south of the border, they're talking very strongly after the 7.5% inflation rates that were posted, that they're really looking at moving up their rates. If they move up their rates, there's going to be some pressure on Canada to follow suit, and that's generally what we do. We do follow suit if the U.S. goes that way.
And one of the things I wanted to talk to you Frank, a little bit about is these numbers here. The units listed in January. This is
Yeah.
something that I think that we continue to take a look at and get your insight on what happened last month here in Windsor, Essex.
Yeah, and you know what? The interesting thing is that we started into January with about 297 units available for sale. We've had increases, almost 11% increase in listings in January compared to last year, and that's usually that's unusual for us to have quite as many houses as had put up here, but that's good. That's a good thing. Why? Because if there's any kind of hedge against pricing to some degree, the more supply that you have, it should be better. And when we have more supply, it bodes well for our business. So, I talked to some of my brokers across Ontario, and we have consistently over the last 3 months had great listing months where we're bringing stock onto the market. We're having inventory for people to buy, homes to buy, for people to look at, and that's really, really good. Especially at this time of year, it's really hard to come across houses. I mean, I'm talking to brokers out of the cities where you don't have 100 to 200 houses available for sale, period, in a whole market. So when I see numbers like this, these are good numbers for us in terms of the supply side for people who are looking, and so that's a good thing. Are they still going to compete? Well, you got to remember, if I'm looking for a specific house in a specific area, I could very well be competing, because it depends on how many houses are listed in that primary area that I'm looking for. So I may have to compete for those for houses in that areas, even though we're getting a higher listings inventory. So the bottom line is that may not change for some people, but just the fact that we've got this overall is a good sign that we've seen an increase in listings for the month of January for sure.
With these listings too, Frank, do you believe, with the exception of last week with the snowstorm that we saw, but the weather has been relatively decent, so that must have been playing into a factor of overall, and through the Christmas break into the new year.
Listen, I always say, if we can walk to the door, we'll let you in. Right? That's really the key. So the bottom line is, as long as we can get in, we got people that will come in and see the house. So that's really it does bode well for us. I mean, you look at some of the weather that we've had around the country. I mean, I can't imagine trying to get into a house, let alone that. That basically shuts the market down. That has not been the case, with the exception of the snow that we got last week. That has not been the case for much of January, and that helps. Weather like that helps us continue on, and people brave the weather to go there. Cold is not a big thing. Snow is another matter, right? Trying to get in there where people are busy trying to clean things out and give you access, that becomes problematic. So this it was a great month. We're probably going to see a bit of a slowdown now because of the last week with the weather that we had.
And speaking of last month and it being a good month, the average sales price too. This is something that we wanted to take a look at. I mean, that's a jump from December to January.
Yeah. You have to realize that you're looking at a 1 month rate there. 636 is for the month, and obviously for the year of 2022, compared to last year's annualized rate of 552,171. That's where we ended the year on the average, on the annual basis last year. But that is a significant jump. There's no question about it. And should we be concerned about it? Well, we may be, other than the fact that we're getting great supply. So, the bottom line is that we had a lot of traffic. Remember, we talked about the upper market, because we have all that traffic in the upper market. That's going to pull that average price up, and that's exactly what's happening. So most of our trading was in the upper market, so that is one of the reasons why that is up. Now, you look at the difference between that; it's a fairly significant number, but also remember that in the difference between the month of December and the month of January, it's about a 15% increase. Okay, so it's not as significant as what we're showing here. This is into the 26% range, so it is a significant increase. But we'll see. We could see what happens very often. Because there's less houses to buy. You get significant increases in price, and then as the supply side kind of catches up, you'll find that this will average out or possibly slide down a bit. So we'll see how this comes out. I don't want to get too excited about January being a really high end month, but hey, the numbers don't lie. The numbers don't lie at all. So let's face the reality that are we going into that $600,000 market? Very possibly. Yeah, very possibly.
It's, Frank, when we have these market updates and we take sort of a wide view at what's happening, not just in the real estate market, but in certain areas that obviously directly affect the real estate market too. And some of those markets include the economic sector, obviously, with those headwinds and,
Yeah.
inflation and unemployment. What's your take on sort of that story on both those topics that may affect the average sales price going forward?
Yeah, my take really is this. I think we have to be a little wary because people are borrowing a lot of money, and they're using their HELOC or whatever they are to do a lot of different things in the real estate market. And I'm not saying that's a bad thing, but the bottom line is that if your ability to pay is leveraged to a great extent, you're going to have a hard time with any increase. Now, having said that, even if we have a half point increase in the mortgage rate, 50 bucks, 60 bucks a month, it's not necessarily going to break everybody, but it would be concern for them. And why do I say that? Because amongst all of this, what are we seeing? We're seeing inflation, and we're seeing substantial inflation. I mean, everybody need only go to the grocery store, go to any, the various different stores, and it's costing me more money to live. So I've already having that. Plus, if I had an increase in my mortgages, my mortgage payment, now it's going to get into maybe $100 or $200 a month. It gets to be a bit more unaffordable. So we have to be aware of it. We really have to pay attention to it. And what I think will happen, basically, if we do see interest rates increasing, is when you have a fixed rate of return for those investors who are buying houses to rent them out, and I've got a rate of return, and I'm trying to get a 5 to 7% rate of return. Hey, if I have to pay more money and it costs me more, I'm going to get less of a return. I may pull out of the market because I become a little bit concerned about, dealing in the market if it's not stable. Now, one of the best things they've got going for them right now, we've had a stable interest rate for 2 years, and it's really low. And when things start changing, the attitudes of particular buyers, particular investors, change a bit as well. They're a little bit less inclined to go and do things because they don't have stability.
We were talking before the air. We came on live here, Frank, about a report that was in the paper recently in terms of looking at some numbers from the last census. And I mean, a huge number of folks, we talked about that influx here to Windsor, but really into the country, 1.8 million immigrants.
Yeah.
And really taking that number and saying, okay, we've got to house these people. Like you said, we've got to feed these people. But quite often the story sometimes is, this is a real estate industry issue when it should really be an issue, I think, collaboratively with all levels to say, yeah, I mean, this is an opportunity for us to sort of keep a good market going.
I mean, I'm just, I've got the Ontario government's affordability housing. They've got a whole report on it. They I think, put that out either today or yesterday. And it's a paper on all of this, and they've come up with the conclusion that they have to put 1.5 million houses into Ontario over the next little while, and so there's lots of ways to do it. Do we go to density? Do we do a lot of different things? And we think we look at density levels in Toronto, and it's about 400, a little over 450 people per square kilometer. Well, go to Tokyo where it's 4,200 people per square kilometer. Go to London where it's 1,800 people per square kilometer. So, I mean, your density levels are much different. You go to New York City, but that's the type of things that we're going to start looking at, right? We're going to have to look at that, being able to put rental units available to a lot more people, all kinds of different things going forward. And I think the governments really have to pay attention to it. We're bringing a lot of people into the country. It just puts a lot more pressure on the infrastructure that you currently have. And if you're not prepared to either add to the infrastructure and start thinking out of the box in terms of how am I going to provide for all these folks that need housing, and do it on an affordable basis. It's not just adding the stock; it's being able to do it with some affordability to it. That's going to be a problem, and this is going to be a problem that's going to go on for 10 years. This is a 10-year plan that Ontario is putting out at the moment. And at the same time, if we continue with the immigration, let's understand the last couple of years has been a bit of a pause because of the pandemic with immigration.
Sure.
Okay, so there's been a pause, but if we go back to it, as the Liberal government is talking about 400,000 people per year for the next 3 to 4 years. That's another million too. So, I mean, how do you stay above that, or how do you stay beyond that? It's going to be very difficult. Nice to say is that some of the provinces like Alberta and Nova Scotia and New Brunswick are getting a lot of traction. Why? Because we're affordable. They're getting houses. You can go to Moncton and buy a house for $250,000 to $300,000 these days. Can't have it here in Windsor anymore. But there was a time when we could have done that, right? So I look at that, and you look at national numbers, and it was only 11 years ago that the average price was around $300,000 in this country, and now we're 3 times that height. I mean, and so that's what's just happened in 11 years. So, I mean, where's it going to end? It's hard to pin it. It's hard to pin it down as to where it's going to go and everything else. But from our standpoint, I hope we keep still in touch with affordability and get people to do that. I hope the city is willing to look at density issues, look at different things that they have to try to provide housing for all. Right? That's really should become a common goal for a lot of different people, not just realtors, but as well every sector of our economy needs to really think about that because it does have an impact when we're doing these things.
Frank, always a pleasure to talk to you. Thank you so much for your insight as always, and a great chat with you, my friend.
Thank you very much. Thanks for taking the time. Appreciate it. Yeah, take care.
Always. Thank you so much. Mr. Frank Binder from Roy LePage Binder Real Estate, our owner and broker of record. So some great advice, some insight on the numbers here locally, and really some of the issues that we're going to be, running into down the road in terms of housing here in the Windsor-Essex area and really across the country too. So don't forget to check out our website, which is roylepagebinder.com, if you'd like to secure the services of any one of our 170 agents right across Windsor-Essex in 5 different brokerages. And we'll see you back here next month on the latest market update for Roy LePage Binder Realty. Thank you so much for spending some time with us here on the show this evening, and take care.